Hey, what's good, all my trader homies? Today we're going to be talking about growth stocks, the top growth stocks to buy right now. A growth stock is like a kid on the 8th grade basketball team that has the most skills, but he's just smaller than everyone else. He has a wet jump shot, he has mad handles, but he's just too small. But if that kid who is more skilled than his teammates grows into his skills, his body grows into his skill set, he will become a beast on the court. And that is very similar to growth stocks. I don't know if you guys knew this, but sometimes I use hip hop and rap references in these videos. And that's because before I was a full-time trader, I was a rapper. I grew up in Atlanta, and I took notes from all the Atlanta rappers such as Jeezy, Gucci Mane, Lil Scrappy, and my personal favorite, Lil Baby. I became a rapper, and that's why I use all these rap terminologies in these videos, just in case you were wondering. But back to growth stocks. So growth stocks are companies that haven't reached their full potential yet, like the kid on the 8th grade basketball team, but they have a sound business model that could allow them to potentially grow and become beasts in the stock market. So today, I'm going to be going over my top 5 growth stocks and showing you guys why I think these companies have tons of potential and their stocks could increase in value exponentially over the next few months and years. So stay tuned for today's top growth stocks to buy right now. What is good, my trader homies? It's your boy Kevin from Touchdown Trades, your trading BFF, your stock market bestie. Today we're going to be breaking down the top 5 growth stocks in the entire stock market right now. We're going to be looking at these stocks that haven't yet made their move. They have a nice sound business model, and I think they're ready to explode higher. We're going to be looking at these stocks from a fundamental and technical perspective, breaking down the numbers as well as the charts. But before we get started, make sure to check out the 2-week free trial for the alert service and chat room down in the description below. It's the only service in the industry that focuses on swing trading. If you're new to the channel, we talk about the hottest stocks in the market every single day, break them down from a technical and fundamental analysis perspective, and we also have swing trading videos where we talk about penny stocks and large caps. So if you're into that type of thing, consider subscribing. Alright, so let's get this party started. The first ticker we're going to talk about, the first growth stock we're going to be talking about is this PRPL, Purple Innovation Inc. PRPL is a mattress company, but they are a very different mattress company than your typical brick and mortar mattress company where you go into the store, you're looking for a mattress, you walk in and you have a sales guy jump down your throat and try to sell you a high-priced, overpriced mattress that isn't even very good. Well, this PRPL Purple is very different because it's based entirely online and they sell a much better product. So this Purple, you go on their website, find the mattress you like. Let's click on this hybrid, for example, and then you order it. They box it up, airtight, roll it up, and it's shipped directly to your house. You bring it into your house, you cut the airtight wrapping, and then it unfolds and is ready to use. You don't have to deal with any pushy salespeople, any delivery guys coming into your house. It's a much easier, simpler process, and that is the direction that this industry is headed in. Purple product is better than your in-store mattresses. It has this purple rubber filling in the middle of the mattresses. I slept on one of these the other day, and it was incredible. It was unlike any other mattress I've ever slept on, and I'm not exaggerating. I'm not BSing just to pump this purple. It is literally an awesome mattress. This purple stuff in the middle is so soft and it like forms to your body when you're sleeping. I have back issues, and after I slept on this mattress, I was like, I gotta get one. And I looked into the company and I was like, dang, this company is going to blast off. This company is going to take off, and I did some due diligence on it and I really like what I see. So you go on here, you order your mattress, it's shipped directly to you, and then you're good to go. They're not as expensive as the in-store brick and mortar mattresses, but they're better. Your typical mattress stores are having tons of trouble because of companies like Purple. Mattress Firm just filed Chapter 11 bankruptcy and is closing down a bunch of its stores because they failed to realize that the industry is headed in a direction where consumers want to go online, get a product that is good, not have to deal with a salesperson, get it shipped directly to their house in a few days, and that be the end of it. It's a much simpler process and it's a better product. All right, let's jump into the numbers for this PRPL. We can see they have a market cap of $1 billion right now on sales of almost over $500 million. So the price to sales ratio is looking good. They're already profitable with a net income of over $4 million last year. But what is really good is the forward outlook, the guidance. The earnings per share is expected to grow by only 6% next year, which isn't amazing, but by over 40% in the next 5 years. And I think it could be more than that because people aren't going shopping in person right now because of obvious reasons. Purple could get a bump due to that. I think this Purple has huge growth potential and it is my top growth stock number 1 to buy right now. If we look at the chart on this Purple, we can plot out my trading plan on this thing. So I like this Purple above this. I want to buy it around the $16 pivot right here. So I'm going to be looking for a pullback into that $16 pivot to get long into. My max loss is going to be down here around $12. And I'm going to look to hold this thing until we break these prior all-time highs. I'm looking at this thing and all of these tickers that I talk about today as long-term swing trades or short-term investments. So I'm not going to sell this thing until it either breaks my stop loss at $12 or it breaks these all-time highs up here around $28. So we have a nice risk to reward ratio. We're only risking about $4 to make $12. So we have a 3-to-1 risk to reward ratio. This PRPL is an excellent growth stock. I haven't seen it talked about a lot. I think it's flying under the radar and has excellent potential. Ticker number 2 that we're going to be talking about, the second growth stock that we're going to be discussing, is DBX Dropbox Inc. I'm sure you guys are familiar with Dropbox. They are a cloud storage solution company where businesses and teachers and students can upload projects to Dropbox and share them with whoever they need to share them with. For example, if a business a team was working on a project and they were all wanting to share their portion of the project with the entire team, they could upload their portion of the project to Dropbox and the other team members could access that individual's portion of the project, look at it, and base whatever they're working on the other team members' information that they've provided to Dropbox. Another example of an application for Dropbox is, for example, a student is working on an assignment. They needed to get it to their teacher, so the classroom uploads all the assignments to a Dropbox, and then the teacher can go on, download the assignments, grade them, and put them back on Dropbox. This is very important because of the old Roni Steins. The Rhinoceros Rex is going to change business travel and commuting forever. Businesses have learned that they don't have to have everybody in the office every single day. They've learned that they don't need to fly people in for different locations to have meetings. Schools are learning about these online cloud storage solutions such as Dropbox as well, why they're closed down. This is huge for Dropbox because it's going to be able to expand their business. These businesses aren't going to be going back to everybody commuting in every day, even after the Rhinoceros Rex is extinct, because they don't have to. They can save money by using platforms such as Dropbox. Instead of having a big presentation where you fly a bunch of people in from different locations to a big corporate meeting, you can just upload the projects to Dropbox, do the meeting via teleconferencing or a Zoom call, something along those lines. And same goes with the school systems as well. So I think the Rhinoceros Rex is actually going to help a company such as Dropbox. If we look at the numbers real quick, we can see that they have a market cap of $8 billion on sales of $1 billion. So the price to sales ratio isn't looking the best. It's up around 5, but we are expecting huge growth. Growth of 90% on the earnings front this year, and growth of 30-something% on the earnings front over the next 5 years. And I think these numbers aren't even incorporating the bump that this Dropbox is going to get due to the Rhinoceros Rex. I think the Rhinoceros is greatly going to improve these growth numbers, and I think this Dropbox has a potential to explode. If we take a look at the technicals real quick, we can see that Dropbox has had a tough time over the last year breaking over that 200 EMA line. It's tested it several times, we can see, and failed once, twice, 3 times, 4, and then the last month it's just been trying to get over that 200 EMA and has yet to do so. But we've bottomed out, so this thing is building up pressure. It's building up pressure in this range, and it's either going to break out to the upside or it's going to fail and break down to the downside. But I think we're looking at a big move to the upside because of the push that the increase in sales and revenue is going to bring to this company. So let's plot out our plan on this thing. I'm looking to buy this thing, risking off of this past low, and I want to see it break over this 200 EMA, this past pivot, and my first profit target isn't going to be until way up here around $34 and $35 per share. So we got the risk to reward. We're risking about less than $5 per share to make about $12 per share. So the risk to reward is there. The trade is there. I'm not going to sell this thing until my stop either gets hit or my profit target gets hit. I think this Dropbox is a huge growth opportunity, and I like it a lot. All right, so the third ticker we're going to be talking about, the third top growth stock to buy right now, is going to be this LKQ. But before we get started, you guys know what time it is. These videos take me a little bit of time to make, a few hours to do the research, a few hours to do the filming, and then a few hours to do the editing. So total, it takes me about 10 hours to do each video. It takes quite a bit of time, and the only thing I ask for in return is for you to do me one favor, and you know what it is. Give the like button the snake eye jab in the eyes, because we do not like the like button. The like button is not our friend, and we are not friends with the like button, so we give it the snake eye jab in the eyes. All right, so this LKQ is ticker number 3 that we're going to talk about. LKQ is kind of like a pull apart, if you've ever seen one. They take in old scrap cars that maybe been in car accidents, are broken down and are past repair, they're totaled, and they take and salvage auto parts off of those cars. Then you can go online and order, for example, say you drive a 2010 Honda Accord, such as myself, and the radiator goes bad in that Honda Accord. You could order a used radiator from LKQ. And I think this is big because I'm looking for companies personally that I think the Rhinoceros Rex is going to benefit and provide growth to. And if our economy is going to take a downturn over the next few years because of the Rhinoceros Rex, I believe a company like LKQ could benefit from that because people aren't going to be going out and buying brand new cars. And when you're driving around with cars that are a little bit older, they're going to be more prone to breakdown, and company such as LKQ could benefit from that. And if we take a look at their numbers real quick, they are sassy. They are very, very sassy. We have a market cap of around 10 billion in the S&P 500. The numbers are looking good. We have $1.50 cash per share on sales of $12 billion a year. The sales to price ratio is actually under 1, which is really nice. If they can just cut the fat a little bit, cut the cost a little bit, they can get the earnings income way up on those numbers. So we have a price to earnings ratio of about 18 and a forward price to earnings ratio of 13, which means that growth is coming. growth is around the horizon. We have earnings per share growth expected of about 16% this year and about 33% over the next 5 years. So we're expecting huge growth on a company that's already a good value. This LKQ is already cheap. So if we do get that growth that we're expecting, this thing is dirt cheap. It should be bought immediately. Let's look at the text real quick, the technical analysis real quick. We'll break down this chart on this LKQ. We can see that we hit a bottom, had a really hard sell-off, hit a bottom, and we've since rallied. So what I'm going to be doing is I'm going to be looking to buy into pullbacks and using this $24 area as my point of risk. That's going to be my risk at the $24 pivot. There was tons of volume traded at that level right there and right there. So I believe it should hold, and I'm going to be buying pullbacks into that level. Any pullback I will buy. What I'm going to be looking for is I'm looking for these highs way over here. I'm looking to hold this LKQ for as long as it takes. I'm looking for about $44 per share as my profit target. We're only risking about $8 to make about $12. Not the 2-to-1 risk to reward that we typically like to see, but I like this LKQ a lot. I think it's a high probability trade, and I am going to start buying any dips coming up. All right, guys, so the fifth and final growth stock that we're going to be talking about today is ticker AGIO. Agios Pharmaceuticals is a biotech. So this AGIO is a cancer drug company with a focus primarily on leukemia. There's nothing really special in the news or any upcoming PRs that I'm looking for to blast this thing higher. I like this AGIO because of the fundamentals and the technicals. The numbers on this thing, this AGIO, aren't the greatest. They're losing a bunch of money. They don't really have any new products coming in market anytime soon. But here's the thing. Analysts have put a target price on this thing of $65 per share, which is way above the current trading price. Now, I don't typically trust the analyst opinion. They're kind of like weathermen. They are only right about 50% of the time. But we also have hedge funds coming in and scooping up shares of this AGIO. Kind of looking at a company that has been underperforming of late, but we are expecting growth over the next 5 years. We have analysts coming in to say that the price is way undervalued and that the price target is $65 per share. We have hedge funds, smart money, smarter than me, coming in and scooping up shares left and right, which leads me to believe that there's something going on behind the scenes and that we could see some huge growth in the near future. All right, let's take a look at the chart real quick, and we can see that this AGIO is currently trading around $39 per share down here, and it is been beaten down pretty bad. So we're getting this thing at a discount. The price target that I'm looking for is $65 per share right there. And my risk is going to be this defined pivot here at about $28 per share. So we're going to be risking a little bit more than $10 per share risk to make $25 per share. So we got a 2.5 to 1 risk to reward ratio on this trade. And I'm going to be looking to hold this thing from anywhere from 3 months to a year or so. So a longer term swing trade, short term investment like the rest of these have been. This AGIO is the least confident ticker that I've gone over so far, but we do have the analysts saying that this thing is about to take off, and we have hedge funds coming in and buying. And I also like the fact that we have a defined risk down here at this $28 level. So we have a couple things going for us on this AGIO, and I don't hate it. I'm going to start scooping up some shares starting next week. All right, so that's going to wrap up the top 5 growth stocks to buy right now. I hope you guys got something from the video. If you did, if you enjoyed it, all I ask for is to hit the like button, give the like button the snake eye jab in the eyes, and consider subscribing. If you haven't yet subscribed, what are you waiting for? The realest trading channel on the tube. I'll catch you guys in the next video. I appreciate the view. Peace.
Drop.